Hey guys, we're back. Another weekly options update where I go through all my trades that I did for the previous week. And this is for July 18th through the 22nd. And we're going to start off with the closes. But first, we're going to start off by saying check out my Amazon link down below. If you if you like what I do here, please support me by using the Amazon link if you are an Amazon shopper. Because after you use that link, what happens is whatever you buy, Amazon sends me a small commission. And it really is small, but pennies add up to dollars. So I would appreciate that. So let's get into it. So July 18th, we started off closing one put on the Qs. It was a 280 strike. You'll see I put that back on. I just basically rolled this out another week. But we pulled it off for $4.95. That gave us a profit of $200 in 11 days. I had a covered call on TQQQ at 35. Closed three of those at 43 cents. Gave me a $37 profit. And I rolled those to a nearer, is that even a word? A closer expiration date, and you'll see that down below as well. TQQQ put had a 20 strike out to August 19th, closed that down for 55 cents, profited $61 there in a couple of weeks. CCL had a 750 put. That's strange. Yeah, 750 put. Closed that out for 25 cents, profited $28 there in 7 days. I think I got this wrong because this says I must not have filled this out because it says stock price date of contract $23.70 and CCL hasn't been $23.70. Kohl's, what I talked about last week, Kohl's closed that one down for 16 cents, so profited $35.50 in 6 days. Go EV, I talked about this one last week as well. Opened and closed this on the same day. It really was I was trying to do a little PMCC with it. Bought the call for $2, sold it for $2.20 a few minutes later, and then sold the covered call and got 35 cents and bought it back for 30. So $22 in profit there, and I think it was like 40 minutes, something like that. I'm probably not going to mess with this anymore. SOXL, these were covered calls at 15 strike. Close those out. No, this wasn't a covered call. Sorry. This was a leap. See the expiration date there, January 23. I bought it a 15 strike. I paid $5.21 for it. I sold it on July 20th for $6.40. So I profited $118 there in 36 days. I'm probably going to look to possibly buy another one if SOXL dips again. ARK, this was the big one. ARK had a nice run up this week, or last week I should say. So I closed my 55 strikes, 7 of those at $7.24. So realized premium there of $1,367 in 13 days. I rolled that down, and we'll see that in the openings. QQQ, that was that roll again. 718, I rolled it down to 1 week out. Got $5.91, bought it back for $3.21. Profited $268 there in 3 days. SPLG, I had a put. This is the S&P 500 ETF. Had a $47 in premium, bought it back for $10, so $36 there in profit. And then Mo Altria Group, I was assigned at $47. So the premium of $1.10 is fully realized, so $109 there. So that's it for the closings. Let's take a look at the opens. So we'll go down here, and 718, there's the one that I closed. opened and closed that same week. QQQJ, I sold a strangle on it. I do own 100 shares, so the call is covered. Got $15 for that at a 26 strike, just like a why not kind of thing. And then a 22 put out to August 19th and got $30 for that one. Intel covered call at 42.50 out to August 19th, got $60 for it. Ford, another strangle here because I own 300 shares of Ford, so I sold 3 contracts out to August 26th at the 14 strike, got $16 a piece for them. And then I sold a put at the 11 strike, same expiration date, and got $37 for that. And then there's that Go EV PMCC that I closed in the matter of minutes. And here's that replacement, that covered call on that TQQQ. I moved it to July 29th to the 30 strike, and I got 80 cents a piece for those, so $240 roughly for that, and that expires this Friday. I do have 300 shares of TQQ holdings, so I'm going to be selling it under my cost basis, try to maximize the premium coming in, and then if it gets called away, I'll convert those to put contracts to cover the loss. ArtK finally was able to roll that down. Remember, it was a 55 strike. Now it's a 54. And I was able to do it for a credit this time, I believe. No, I did have to pay like $300 to put this on. So that wasn't even that much. Let's take a look. I got to go back and look now. I thought I got a credit. Let's see. ArtK. Nope. Exited at 724. And then I opened it at 695. So it cost me, what is that? 25, 30, $210. $210 to drop $1 off the strike price, which is, you know, every time I drop $1, it's because there's 7 contracts. That's $700 difference. So I didn't mind doing that to get a little safer on ArtK. And we were able to pull $4,865 in premium off of that. TNA, we'll go over the TNA research on why I chose this strike, because we did a August 26th 30 strike on TNA. TNA is the 3x leverage small cap. Got $105 for that. CCL, another put at $9. Got $52 for it out to August 19th. It was pretty much, there's no technicals on this one because everybody knows it's getting beat up, but CCL did a stock sale, I guess it was, to raise funds, and they marked it at 9, I forget. It was in the high 9s that they were going to sell these shares at. So I figured 9 strike would be safe, and that's why I went into it. But I mean, it's already in the low 9s, so we'll see. I don't mind taking ownership of CCL shares. And then QQQ, we're back on that. Sold this one out to September 2nd at the 280 strike, got $390 for it. And then a string of SOXLs. If those of you remember, I had a bunch of SOXL shares and I closed it. And this is kind of, I closed it for a loss. So this is kind of making up for it in a way, slowly. Just trying to claw my profits back out of it. And what I did here was did a basically kind of a ladder. So I went every week, July 29th, August 5th, August 12th, and August 19th. And the strikes were $16, $15, $14, and $13 respectively. And we got $58, $61, $58, and $53 respectively for each of those puts. So that's it for the openings. Let's take a look at premium cooking, and then we'll go over the TNA. Let's go over the TNA first. So here's the TNA. It's the Direction Daily Small Cap Bull 3 times shares. So it's 3 times leveraged. And so if it goes up, it's going to represent 3 times the performance in either direction, up or down. And you see I chose the 30 strike, and you see if we zoom in on this chart, Fidelity changed up their charts. I don't know how I feel about it, but if we zoom in on this, I did this on the 21st, and you'll see the day before, TNA jumped up above its 50 period moving average. So that's when I saw that move above that, this got attractive to me, because now this 50 period moving average may act as support. And even if it doesn't, if we zoom back out, the 30 strike, which is all the way down here, is pretty much the low. And if we go back even further, the $30 strike, which is right there, is a pretty decent long-term price for TNA. So that's where I decided to go with the 30. It was showing bullish, crossing over its 50, and then also $30 is a nice support level anyway. So that's where I got the $30 strike. I could have went in heavier and went into the 30, 34, 35 range, but that's a bit aggressive. So that's how I did TNA. So let's take a look real quick at Premium Cooking. So real quick, week ending July 22nd, we closed 12 positions, open 17, profit realized $2,286.50. Premium sold 6,353. Most of that is coming for that Art K. And total Premium Cooking is way down from what it was, down to $5,691. I'm not liking this. I really needed to bump up a little bit, because the vast majority of that is August 19th in the Art K's. So I don't have a whole bunch of stuff really out there cooking. So I really need to find, and this week, as we'll talk about here in a minute, could produce some pretty solid opportunities. Maintenance margin 30,300, buying power usage 27%, cash balance down to 16,453. That's because we got to sign those MO shares. Deposit 0, withdraw 0. Net lick up to 112,700. Return on maintenance margin 8%. Return on net lick 2%. So not a bad week at all, but I have a feeling we're going to be slowing up here. If we look at it year to date, started out the year 123,100. Final value right now, or last Friday, 112,700. For an 8.44% decrease year to date. Now I did add some money, so this is not, money weighted or whatever, but if I did back out those numbers, those deposits that I made, it's still right around a 14% decrease. So still beating the averages, because S&P's down 17.4, NASDAQ down 25.2, Russell down 20.4, and Dow Jones is down 12.8. And I typically compare my returns against the NASDAQ and the Russell. So I'm doing a lot better than the NASDAQ and the Russell, and I'm extremely happy about that. So this coming week is a big week in the market. Big dogs are reporting: Apple, Microsoft, Google, Amazon, Facebook, Visa, ExxonMobil, Procter & Gamble, MasterCard. I mean, geez, like everybody's reporting. Walmart just shook the market and cut their guidance, which is true, but they picked the wrong week to probably spit that one out. You got the GDP coming out. You got the rate increase possibly happening. And then you got all these big earnings. So very, very interesting week that could go either way. Honestly, if it honestly can go either way. if some of these big dogs do some good reports, it might be enough to shake off any sort of GDP recession talk or rate talk. It really could. But, only time will tell, and it could present an opportunity in the market. So hope you guys are well. Hopefully this didn't go on too long. And again, use the Amazon link. Join me on the live stream every Sunday night where we just have fun. Sometimes we'll talk about investing. Sometimes we'll talk about, I don't know, carrots or something. Seriously. It's just a free for all. So hope you guys have a good week. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.